June was the strongest month of the year for condo and townhome sales in Kelowna and West Kelowna. But the real story is not just that sales went up, it's why they went up and what that means for the rest of the summer market. There were 173 condo and townhome sales in June. That's up from 159 in May, and it's up 31% from the 132 sales that we saw last June. On the surface, this looks like a simple headline. Sales are up. But here's the question that actually matters. Is this the beginning of a stronger condo market, or did a delayed spring market just finally show up? Because when you look at the month-by-month trend, the pattern becomes pretty clear. January was slow with 75 sales. February, it climbed to 103. March jumped to 144. Then in April, it dropped back to 115. At that point, it looked like the spring market might not come. But then May bounced back to 159. And June smashed that number to 173. So last month's big question has an answer. The spring market didn't stall. It just started late. But that brings up the bigger question for buyers and sellers right now. If sales are heating up, are prices next? And that's what I'm going to break down in this video. What June's sales number really tells us, where the momentum is the strongest, and what this could mean if you're planning to buy or sell a condo in West Kelowna or Kelowna this summer. Quick note before we get into it, this data, it covers Kelowna and West Kelowna only. There's no Lake Country, there's no Big White, and leasehold condos are always excluded. I'm Mark with KelownaCondos.ca. If this is your first time here, I help people make sense of the condo and townhome market. Let's start by looking at where we are for the first 6 months of 2026 versus the first 6 months of 2025. There were 814 condos and townhomes sold in Kelowna and West Kelowna in the first half of this year. That's up from 794 in the first half of last year, which is about 2.5%. But the 2 years, they got there in almost opposite ways. 2025 was front-loaded. January, it started at 96, it climbed through the spring, and it peaked at 162 in May. Then it dropped back to 132 in June. 2026 was reverse. January opened at just 78 sales. Then it dipped again in April, and then it took off in May and June, closing at 174 sales. Apartments, they made up 479 sales this year, up from 441 last year. Townhomes, they came in at 335, which was down slightly from last year at 353. So apartment prices are essentially flat year over year. The median dipped slightly from 445,000 to 440,000 this year. Townhouse prices, they moved up a little bit. 720,000 last year to 725,000 this year. So the totals, they look a lot alike, but the path to get here didn't. As always, I'm going to start with apartments first. There were 101 apartments sold in June. The median was 470,500. There were 72 townhomes sold. The median price there was 724,200. Apartment prices are up about 1% from last June, when the median was 465,000. Townhome prices, though, are up almost 6% from last June, from 684,000 last June to 724,200 this June. Both apartments and townhomes moved up in price and volume this year. Let's look at the bedroom counts, starting with apartments. 2-bedroom units, they made up 74 of the 101 sales. That's about 73%. There were 13 one-bedroom sales and 14 three-bedroom sales. So 7 out of every 10 apartment buyers, they chose 2 bedrooms. That has been consistent all year. In the townhome market, 3-bedroom units led with 32 sales, which was about 44%. 2 bedrooms saw 21 sales, 29%, and 4 bedrooms, they had 15 sales, which was 21%. And there was a handful of 5-bedroom sales that rounded it out. 3 bedrooms is still the biggest group, but it's getting a smaller share than we saw earlier this year. 2 and 4-bedroom townhomes are picking up more of the market. Let's look at price ranges, starting with apartments. There were 27 sales under 400,000, which came out to 27%. In the 4 to 600,000 range, there were 42 sales, which you guessed it, 42%. Between 600 and 800K, there were 19 sales, or 19%. Above 800K, there were 13 sales combined. About 70% of the apartment sales were under 600,000. That is still where the bulk of the apartment market sits. So now let's look at townhomes. There was only 1 sale under 400K. Basically, nothing. 4 to 600K though, it saw 21 sales, which was 29%. There were 25 sales in the $600,000 to $800,000 price range, which was 35%. and it's still the biggest group. 17 sales landed between 800,000 and a million, which was 24% of the market. And there were also 8 sales above a million, which is 11% of the market. Same as last month, the 6 to 800,000 is still the sweet spot for townhouses, but there's still a lot of activity above 800,000 as well. Almost a third of townhome sales landed above that mark. If you like this data, subscribe. I put out a market update every month with the same breakdown. It's the only place in Kelowna that's focused exclusively on the condo and townhome market. Active listings at the end of June were just under 950. There were 567 apartments and 376 townhomes and strata units. At June's sale pace of 173, the overall months of inventory sits around 5.5 months. Apartments are at 5.6, townhomes are at 5.2 months. For context, under 3 months is a seller's market, 3 to 6 months is balanced, over 6 months is a buyer's market. Both apartments and townhomes are now pretty much inside of balanced territory. Compare that to May, when the overall inventory was sitting around 6.5 months, which was right on the edge of a buyer's market. Sales picked up and active listings came down from where they sat in May. Both of those moving in the same direction is what pushed that whole market into balanced territory. When you're looking at the real estate board posted stats, the days on market doesn't tell the whole story. When a realtor cancels a listing and then relists it at the same price or a lower price, the days on market counter, it goes back to 0. In June, 45 of the 173 sales did exactly that. So the MLS, it shows an average of 64 days to sell. The true average, though, once you account for those relisted properties, is 112 days. The median is 70. That gap between 70 and 112 days, it means a handful of properties sat for a really long time before they sold, and they're pushing that average up. Apartments averaged 118 days. Townhomes averaged 104 days. Here's how that breaks down by price range. Under 400K, 121 days on average. 4 to 600,000, 106 days. That was the fastest moving range in June. 600,000 to 800,000, it needs a closer look because the average is 116 days. But that's inflated by one property with a listing history that went back over 3 years. If you strip that one out, the average sits closer to 92 days, right in line with where the rest of the market is. 800 to a million averaged 124 days, the slowest range this month. Above a million, the ones that sold averaged 93 days. But that's only 15 sales against 129 active listings in that price range right now. It works out to about 8.5 months of inventory. It's well into a buyer's market territory. So the properties that are priced right are selling. But there's a lot that aren't. Probably due to the smaller market just as much the price. Now, let's look at what sellers actually received. I compare the sold price to the original asking price, not the final reduced price. Now, that's the number that shows the gap between what the sellers expected and what the market was willing to pay. Overall, sellers received about 95.3% of their original asking price in June, roughly 5 cents off every dollar. By price range, under 600K was 96%, 600 to 800K, 96.2%, 800 to a million was 94.8%, and above a million was 95.6%. The $600,000 to $800,000 range, it held closest to the original asking. Entry-level condos gave up the most, and that's a pattern that's been consistent all year. Looking at occupancy, of the 173 sales in June, 45% were owner-occupied, 36% were vacant, 7% were tenanted, and the remaining 12% were units where vacancy or where the occupancy, it wasn't specified in the listing data. Again, tenanted at 7% is in line with what we've seen all year. Tenanted units, they're harder to show and they don't always show as well as owner-occupied units. So if you're a seller with a tenant in place, you really want to think about that before you list. So which areas were the most popular in Kelowna and West Kelowna? Lower Mission, it led again with 28 sales. Or 16%. That's 3 months now in a row. Kelowna North had 25. Glenmore and North Glenmore combined also had 25, tying Kelowna North this month. Kelowna South had 18. West Kelowna combined had 22. Springfield Spall had 14. And the University District also had 14. Lower Mission, it just keeps showing up near the top. There's lots of inventory, there's lots of different price points, and buyers are looking at every part of it. So a few things for me really stood out in the June numbers. First, the sales volume jumped. With 173 sales, June was the strongest month of the year, and activity was 31% higher than June of last year. Second, the inventory tightened. Months of inventory dipped from 6.5 to 5.5 in just 1 month, which moves us into more of a balanced market. And you can tell that because there's not a lot of good condos to show. And third, the slower part of the market right now is not the 600 to 800 range. It's the 800 to a million range where listings are just taking longer to sell. So heading into July, that's the number that I'm going to be watching closely. Again, July 2025, it had 162 sales. If July 2026 comes in above that, then June was not just one strong month. It may be a sign that the condo and townhome market is starting to shift. So that's the June 2026 market update for Kelowna and West Kelowna. For building by building research, check out kelownacondos.ca. It's the best place to start. And if this helped you make better sense of the market, give the video a like so more people can find it. If you know somebody thinking about buying or selling a condo or townhome, feel free to send this their way. Thanks for watching, and I'll see you in the next video.